Side.
Hello,
Oh, yeah.
Oracles. Welcome back to Friday Night Live. Tonight we have back on Alexandra, Tesla Boomer Mama, as you all know her over on Twitter. We've had some awesome stuff going on today, Tesla with their price cuts, and we're going to dive into what that could mean for the future, along with the credit rating, institutional buying, lots of great things going on. Alexandra, how have you been? This is the first time we've spoken since the New Year. So how's your New Year been?
Thank you very much. Happy New Year. I know in America you don't say that once the 1st of January is over, but in Europe, actually in France, we can say it until the end of January. So I'm still saying it. Happy New Year to everybody.
It was funny the other day. I was wondering myself the other day, I was like, how long am I allowed to say this for?
Yeah, well, there you go. In France, they're very open about this, like 31st of January. Fine. So there we go. Happy New
Excellent.
Year.
Good. So, so the price cuts this morning, how do you feel about those price cuts?
I feel very good about them. I'm happy they took action. I didn't understand. It was actually funny because we had discussions preparing the call with Gary 2 days ago, maybe. I'm losing all notion of time talking Tesla from morning to night, right? I think it was 2 days ago. And so we were saying it's really weird. Oh, there's an echo. Is there an echo?
I don't hear it on my end. If
You
anybody
don't
else
hear it?
hears it, let me know.
I'm fine. Exactly. I mean, there's somebody in the comments seems to say there's a kind of a weird echo because here everything seems to be set up correctly. Okay, so what we said 2 days ago is it's really weird. End of December, people had the 7,500 price cut. Second half of December, I mean, I felt for these people, they were like jackpot winners, right? Not a tax credit or anything, like they had it. I was actually thinking of you because you still have that Y to come, right?
Yeah, it's funny because Tesla texted me today telling me about, the price cuts. They told me twice that my order was canceled. It's still on hold. I can still take that from November of 2021. They've still left it on hold.
And what price is it at? That's the whole question.
It would be for today's price. So
wow, that's good.
It was weird because in December when they dropped it by $7,500, I asked them flat out, I'm like, can I get my original price and the $7,500 off? And they said no. And then they said your order is canceled. And I looked today and on the order page it says remove hold and you can order on today's prices. I'm like, all right. I mean, obviously today's prices are better than what I had in November of 2021, but I'm like, it wasn't by much. I think it was like 56 back then. So it's still less than that, but like it's still on hold. So
plus
$250. So like I keep the deposit.
Sure, and plus the tax credit, right? So you can also obviously benefit from that at the year. Good. So anyway, so 2 days ago we were like, it's so strange. We had this aggressive move second half of December, and then we have this void beginning of January. What's happening? And so I know Gary sent a couple of people scouting out their different Tesla stores. I sent my husband. Everybody was like, nobody knows, and it didn't give me a good feeling because it was like something was brewing, but you didn't know what.
Right.
And I mean, we're obsessed, right? I mean, I'm checking out whether they get delivery trucks, and we're walking in that store as if it's I mean, we're going crazy, but never mind. So 2 days ago, nobody knew. And this morning, I mean, last night, obviously we knew because we were in a space last night with Omar and Diane Tesla Diva, and that's where the news broke. And very happy. Very surprised that it's also applicable in large parts in Europe. I think this is a very aggressive move. Very, I mean, we're playing offense. That's no doubt about it. Right. Everybody now has to adapt to Tesla. Tesla is again the goalpost, and everybody has to now adapt to that.
Yep. And even if the IRS decides to change the tax credit, doesn't matter at this point.
They can change it all. I think they were very clever. I think they were very clever in saying, okay, this works for the first quarter. We'll see. Nothing is guaranteed thereafter because this is going to bring a good push in a quarter that's usually lagging. So very clever. I still don't understand why it took 12 days to get there, but we're not going to be.
I almost wonder if they were trying to see what was going to happen in China first to see what those price cuts before they did them here. I don't know, or maybe just 12 days of higher margins was going to make a difference. I truly don't know. And then I wonder about Q2. If they hold it the way it is, I'm wondering because the Model Y performance does not qualify, and even if you start adding on a few of the options for the long range, doesn't qualify. So I'm still wondering if in Q2 they're going to drop prices down by like $3,000 each just to, allow those options to come in, and people who wanted to add colors would go grab onto them.
Would go later, because I mean at the moment obviously the Model 3 is no problem, but the Model 3 has another problem because it has obviously batteries in there that were initially not allowed in the IRA text, right? So that was always the reason why people thought that the Model 3 would not be included. Now it is for sure included the first quarter. So I think there's going to be a huge wave of Model 3 orders.
Oh yeah.
Maybe they just waited the 12 days to have stock again, right? Because that's the other thing.
Oh, that's true too.
You have to produce them, right?
Yeah. Yeah, that's true, because if they wiped out, pretty much all of their inventory at the end of December, if they had nothing, letting it build up. Because I was tracking here in Connecticut, I can see easily Boston, Rhode Island, and New York City area. And last Saturday, I'm going to check it again tomorrow morning, there were 92 Model Ys and 25 Model 3s. So I'll check tomorrow to see how, one day of price cuts, how that affected inventory.
But
it'll be interesting to see that.
Updated.
And I noticed that, the long range, so they didn't even, or the long range Model 3, I didn't see on the list, but it did get price cut. It did get price cuts though.
Yeah, but you can't order it, right?
No, it's only in inventory. So if you go into inventory in some places, it's $49.9. So that did get them. But I'm very happy they did it too. And again, when it comes to the margins, I think they're going to surprise us. Even if they came in with 24% margins, like Pierre was saying, if we come in with a few percent margin hit on it, but they're pumping out the volume, does it really matter at the end of the day?
Isn't it funny how that 24 number is now triggering through? I love that, because so I think it was Gary first who put it down. Then Ives jumped on it and said, yeah, fair enough, maybe 24. Then Pierre Ferragu had all this calculation for 24. Then Gary said it again this morning, and now suddenly everybody's talking 24, 25, as if it's already a given. I love this. And I mean, people always ask me, why are you always, why are you going on the advisory board of Gary? Why are you always talking to Gary? Because he doesn't even realize how he sets the mood. I mean, we may like it or not like it, but there are people listening to him. And so if he has the right information, I'm sorry, I've got a FedEx delivery, of course. I'm sorry. I hope he's not going to ring the bell. There we go. But there's gone. So I actually like how he is setting the tone. And I think he's, getting more and more measured and responsible with it.
Yeah, and when it comes to, I love Gary, and for me, he's always been like the translator between Tesla bulls and Wall Street, and he really speaks the language, because when there's a lot of the bulls that are out there saying, Tesla should be going to the moon and this and that, and Gary's like, but you have to remember, Wall Street is the one who's really controlling a lot of this, and if you don't understand that, you get frustrated as a bull. This is why we saw so much of the drama going on over the last couple of months for all sorts of reasons. But yeah, do you have a theory why we have such high volume? Because I mean, even Gary is like, yeah, fair enough. I mean, I hear, retail people may have had margin, institutionals coming back in, some people just doing short-term trading in and out and taking a little bit on the margin. So I hear all that, but it just seems crazy how there's now for weeks such high volume. Yeah, I mean, and we went for so long being under volume forever.
Yes.
So, and we're going to dive into now with institutions with you, with Ark buying everything they're buying. Are there really that many institutions? We saw last Tuesday in the report from Vanda that there was $316 million worth of shares bought by retail investors on Tuesday. And then Wednesday was another 300 million. So there's a lot of retail money coming in, but is it margin? I mean, it could be. So many people got cleaned out of margin. And, you're hearing so many people, this is the bottom, loading up. And gosh, I hope not. Folks, if, this is financial advice, watch out for margin. At least for the next year and a half, watch out for margin.
I completely agree. I mean, I don't see further than May, but until that shareholder meeting, I can only say it from a governance point of view, because that's a little bit more my angle. There is so much going to come, right? So we have the fourth quarter earnings in, what is it now, 2 weeks, right? And then we have 1st of March, the Investor Day, which I think will be wonderful. But do we really believe Wall Street will understand anything about it? We'll see. So probably there will be a little bit of a hype before and then a letdown like we usually have. Yeah. Then we'll have 3rd or 4th week of April, the Q1 numbers. Then we'll have on the 16th of May, the shareholder meeting, right? And at the shareholder meeting, as I wrote in my article, there are 4 of the 8 board of directors who are going to be replaced. Now, we don't even know what's happening with Kimball now, right? I mean, family drama right in front of our eyes, unfollowing. There we go. So the whole thing is, at one point we were at 11 board members. Now we're down to 8, maybe 7. Who knows? Will there be new ones? So that means even more people need to get elected. To be elected, depending on which path you choose, it's either 50% or 67%, depending on how late it was presented to the shareholders. So it's just, there's so much drama coming, right?
Yeah.
I mean, none of it has anything to do with the execution of Tesla, right? We have to always get back to the fundamentals. But, the journalists are going to have a good time, a good time.
And we all know that Tesla gets clicks, and that's what people like, is getting those clicks. That's what pays the bills. So if it's good times, it's going to be good, like we saw for 2 years. And if it's not good, it's going to be ugly. So you definitely have to watch out.
So no margin. That's exactly the message. Yeah. No margin. Keep straight face. That's it.
And so that's what I figured. It was probably some people getting back into margin and institutions. So like you've been obviously tracking Ark, how much more do they have? Last I checked, was it 200 million or 200? Is it 200 million that they
can still go? I mean, if they want to go in all 3 funds where they have Tesla 10%, currently some are at 5.5, some are 6.5, some are close to 9. So if all of them would go up back to 10%, they still have 260 million to buy, and they bought, I think it was about 120 now. So we're not even a third there, but they have been consistently dollar cost averaging. Obviously, we don't have today's numbers. It will be out in 2 hours, but you always have the feeling whenever the stock went down, they went back in, and they seem to have an algorithm. I mean, I'm probably overinterpreting, but I may as well share that. If the stock goes down, let's say 1%, they put in the equivalent of what they consider 1%. If the stock goes down 2%, they put in the double. If the stock goes down 3%, they put up the triple, right? So that's why you suddenly have days at 12 million, and then you have a day at 2 million, and then you have a day there's nothing happening because the stock went back up. So I have the feeling that's how their market maker, because those funds always have one market maker that executes the trades for them. The market maker is placing those. So but I mean, again, that's me speculating here, right? I mean, I could be completely off.
So now a question that somebody had presented to me was, how are they getting the funds to make all of this happen? Because they're not allowed to hold cash, right? So they have to.
Oh, I love it. Thank you.
They've got to have inflows or outflows.
And no, there's actually a couple of things happening. Oh, yes. I love it. Can I really talk about that? Because usually nobody wants to talk about that. Thank you. So Ark is different from all the other 5 I'm following because Ark has 0 cash. She just doesn't want to have any cash. Okay. So when you buy, you need to sell first. Yep. So whenever she presents in her daily trades, you can see that she sold for a total of 0.4%, and she bought something else for those 0.4%. So sometimes there are a couple of days where it's a little bit moving average, right? But they have to sell something. They have to get out of a position to get more into another position. That's Ark. And I'm coming to in and out first in a second, because that's then a second movement that happens on top of it. For the other funds, they do have cash. Some of them even big. For example, VCAR, the one that has heavy options, they have quite a lot of cash because they want to have cash to purchase options when they're ready, right? So they have an 85 different stock portfolio in little bitsies and bitsies that probably reflects, I don't know, the Russell 1000 or whatever. It looks very, and they have Moody's in there. I keep on screaming at Ted Park, how in the world can you hold Moody's, right? But that's just it. So they must have selected a certain beta mover basket, whatever, how they wanted it, the Apples and the Sonders and the Microsofts of this world, and then some medium caps. They add on that the options, but they keep a high equivalent of cash to be able to purchase other options, either because they now suddenly do straddles or whatever, or because they're now getting out of options and they have cash again, but they don't want to put it in equity. So that's the solar opposite from the Ark funds. The Arks is all in stock, and you have to sell position from one stock to get into another stock. They are more, well, we have this 85 stock portfolio, but we have cash, and we use that cash to go aggressively into options for a couple of days and then out again, and blah, 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 like these. And in the middle, you have the Gerber Kawasaki, the GK fund, and the new PP fund from Real Meet Kevin, or Meet Real Kevin, or I don't know what's his name, and Gary, and the YAL, the right wing fund, They do it more in a conservative manner, meaning they have a portfolio, and then sometimes they have $10,000 lying around, sometimes they have $100,000 lying around. So this is a cash position they can build up when they have a conviction that it's too early to get into the market, but they want to get ready for it, and then they do it. So they have cash positions, but not to go into options like the VCARB, but whatever. So for all of them, the cash position, it has a different function. And then on top of it comes in and outflows. So the one thing that people don't understand with ETFs, and I'm sure you understand, but I want to say it again, is let's take Ark K, for example. Ark K has about 180 million shares outstanding. Let's say I'm a big institution and tomorrow I sell 10 million. Then tomorrow this ETF is only 170 million again. Meaning when I sell and nobody else buys the same days, these 10 million stock retire. So it's not like with Tesla where you need a buyer and a seller because you have a certain amount of stock. For the ETFs, the stock is the variable. The stock is the one adapting to in and outflows. When I come the next day and buy again 10 million, they issue new shares. I mean, obviously, there's nothing physically touchable, but that's how it works. So ETF, people don't follow that notion, but a very important notion to follow is how much stock is outstanding. What is the number of shares outstanding? Because it's not a fixed amount. It is something that belongs to in and outflows. So the ARKs of this world, and I'm sure even Gary of this world, they don't even look at in and outflows. It's the market maker that gets the information that today 5,000 ETF shares have been sold, and then proportionally all the 30 or 85 positions get cut a little bit to provide the liquidity to pay these, and then they retire, right? So it's much more physical than intellectual, right? It's really a matter of how many shares do I have? How much are they worth? Somebody goes out. I need to sell proportionally a little bit of each stock that's in there.
Okay. All right. So instead of having, actual piles of cash, they just basically utilize the shares of their ETF to generate that cash to make the moves.
Exactly.
Okay.
Exactly.
All right. So, and now my impression, I thought, and I don't know if it's different for each fund, I was under the impression that they weren't even allowed to hold cash. So I thought that was a rule that they weren't allowed to.
They do. ARK clearly says they don't want to.
Yeah.
So ARK has some internal rules. The cash one, I don't think, is in the portfolio in the prospectus either. So ARK has two rules. I may be wrong on the second one, but I think it's the same. Saying none of our stocks can go above 10%, except if they move by the price above 10%. Meaning we can add to that stock until we get to the 10% limit. We can let it run then a bit. They hardly let it run more than 13, 14%. I think at one point in time in 2019, they had 16% of Tesla, but it was not because they added additional stock to it. They just let the price run, and the price ate into the portfolio, right? So the first rule is the 10%, which I think is the most stupid rule I've ever seen. And the second rule is that they don't want to have cash, right? They go out. Now, why do they do that? Over the last 2 years, where ARK's performance was horrific, mainly due to the Fed, but also because of stock picking that was extremely aggressive, because ARK is going into the niche of the IPO'd, but still high growth funds, right? Yeah. I mean, Tesla is in there as a mega cap, but Tesla is the only mega cap they're holding. All the rest is really high risk, just growing into it.
When they first got into Tesla, it wasn't a mega cap.
The same, exactly. And Coin and I mean, they really took some big risk. I mean, obviously, Square is now getting there as well, whatever. But the initial approach is we analyze these companies very early and then we go into them. Yeah. And when they pitch it to institutionals, I don't think they do it as much to the retail people that I wish they would, but when they pitch it to institutionals, which now, and I think we want to talk about that, make up 50% of RK, which is the biggest one, they obviously tell these institutionals, and I've heard Cathie would present this on CNBC and other channels, saying, look, you don't need 10% of an ARK fund, but you need 1 to 5% of an ARK fund. You have you, portfolio manager, when you do your allocation, you may manage some of the stuff yourself. You may use other funds, index funds, whatever, for certain purpose. But for the salt in the soup, add some Ark, because that is gonna maybe produce nothing, but maybe be the high flyer of your life, right? And that's how they sell it to them. So that portfolio manager doesn't need her to hold cash. That would actually dilute his investment if ever this works, right? So her promise is that if her thesis is right, they will have the maximum exposure to that thesis and don't need cash to dilute it.
Okay. And I've got, throw this up here just because a question. With all due respect, Ark K cannot hold cash because of the rules. They do not pay taxes when they sell something. This is why they need to buy something else immediately with the funds. Is that true to your knowledge?
It's not, because I think they have the same basis prospectus than the other ones, which are holding funds. The ETFs, I think there are two things that are mixed up here. The ETFs have a tax advantage role, right? They don't have the same rules that we retail investors have, that when we sell a stock, this creates a taxable event. Doesn't in an ETF. That's one of the big advantages of ETFs. But that doesn't mean none of them can hold cash, because like I said, all the others I look at on a daily basis have cash, and they have the same legislation under it. It could be that Ark in their portfolio put in the prospectus that they don't want to hold cash. Like I said earlier, I'm not 100% on it whether it's on the portfolio, but it is for sure one of their internal rules. No cash, no stock over 10%, except if the price moves it above 10%.
And now they can change their internal rules, right? So if they wanted to change it to 15%.
Yeah.
Okay.
Yeah. And I mean, I've been on them from 2 years ago. I started writing long threads about they should change it. I mean, no, nothing's going to happen. But I mean, it also will become less and less likely that they change anything, because now they have so much institutional investors. So let me get back to my 180 million shares of RK. So over the last 2 years, these 180 million shares hardly budged. Remember, I told you that, if lots of people would sell, the number of shares would go down, because that's how they function, right? It's a method. The number of shares is a really important measure for ETFs. But the 180 million, they went down minus 20 plus 20, meaning they varied. They could have gone down to 160 and they went up to 210 or 206, but they didn't fall down with the performance, right? So meaning whenever retail investor exited because they couldn't stomach it anymore, obviously somebody else entered. And that's how we got to that tweet that we discussed together 2 or 3 days ago with those green lines, remember? Where we are today in a situation that Ark, of the 180 million shares outstanding, 90 million are in the hand of, I think it's 380 different institutionals. Okay. Meaning really, the Goldman Sachses of this world and whatever. And so once you make to these people the promise that your portfolio will have no stock going above 10%, except if the price rises, or that you don't hold cash, well, then you have to stick to that mantra, because that's why these people came in. With a retail investor, you could change it much easier, because retail investors are less sensitive to rule changes.
Yeah. So now when it comes to the other institutions that are out there, obviously we're awaiting Moody's to finally make this move to upgrade, which I mean, you've been saying obviously after Q4 earnings, they've got to come out with it. So I would imagine it's coming soon. And when we talked last time, we were talking about, that's when S&P first upgraded. And now we're looking at the trickling of these institutions starting to come in. And this is what a lot of them were waiting for. So now we get Moody's and we're starting to see this. And that's why I'm wondering if a lot of that volume is from institutions starting to dollar cost average. I've been listening to a lot of reports of institutions, portfolio managers, and all of them are saying the same thing, that this year is going to be that slowly dip your toes into the water kind of year where you're going to DCA on a monthly or quarterly basis. Obviously, Ark is doing it on a daily basis. But I think that's what a lot of institutions are doing. And do you think we're going to see more of that as the year goes on, especially when Moody's upgrades them?
Yeah. So let me get one by one. The Moody's upgrade is overdue. But I think they will try to do the bare necessity the slightest little bit. And so I think they're strategically going to place it 2 or 3 days prior to the Q4 results. So the Q4 results on the 25th, I think on the 23rd. That also coincides with the 1-year anniversary of their last annual report. So I do believe we'll have it now in about 10 days. And that would then give finally Tesla the double investment grade at lowest level. And they deserve better, no doubt about it, and especially compared to everything else. And I will do mid-February my table again, and I just scream again. But I mean, at least we have it then. There were a couple of things that suddenly fall in place, and let me share these with you. And again, I can only speculate, but it's a cute story. You remember when we talked last time, we thought S&P would do it after the Q3 results, end of October. Yeah. But they did it, if I recall it right, on October 6th.
Yeah, it was. Okay, it was like 2 weeks ahead of time.
Exactly, and we were all, why now? And the report was like coming to Jesus. Sorry if anybody's religious here, but I mean, it was really coming to Jesus. We understand everything. Tesla is the best. Look at that. You read that report, and I was like, I can't believe it, right? I mean, I'm enthusiastic about Tesla, but probably I wouldn't have written it like that. But there we go. So it was really good. And okay, my house and your hoodie have something in common. You see how these people are making fun of us? I mean, my gosh. I don't know what my house has.
I love TSLA fudge hoodie because, you know,
yeah, and this is my dining and this is my dining room. I shouldn't share my dining room, but when I put fake screens up, everybody's screaming as well. Oh my God!
Because your dining room is so beautiful, it's like what a fake screen would look like.
There we go. Okay, well, let me come back to my S&P story. So that was 6th of October. Nobody understood why, but I mean, we're taking it. But nothing happened to the stock, right? And I was going, you know, I can't stomach it when I don't understand it. You know, that's the analyst in me. When you've been 10 years analyzing financials, you love going into those rabbit holes. And when you don't find anything, you're searching and searching and searching again. And so about 2 weeks ago, the Tesla published a study of how much employment was created in California thanks to Tesla over 3-4 years. Remember that it was in red and white. It was really nice stuff. It was the Tesla Twitter account who published it, nice charts and whatever. I thought that is really particular. Who did that? You know, do they suddenly have a communications department that's starting to work on stuff and whatever? And you know what? They missioned end of September, beginning of October, S&P's subsidiary to do that.
Oh, that explains
exactly.
a lot.
And I thought, oh my God, they're starting to learn how this works. Okay.
Wow.
And exactly.
Well, I remember that's what you were saying. That's what you were saying before. You're like, why are they not doing this?
There you go. Because that's how you play this game, right? You pay for something that maybe you need it, maybe you don't, maybe you can use it, maybe you don't. But I mean, do I like it? No, of course I don't like it in principle, but that explains suddenly what happened on the 6th of October, right? And then Elon said, Moody's is irrelevant, right? He answered to one of my tweets, and I obviously when he answers, I keep it in mind. So I think they just never did that with Moody's.
Yeah,
Moody's, they're not playing Moody's, and they just want to shame them into it, thinking, look, this is how S&P finally got it, and you have to get to it. So I'm still very hopeful for in 10 days. And then to get back to your question, what will this do to institutionals? There are institutionals that are already buying. It was actually interesting this morning with Gary. Gary confirmed, and that's typically what I expected, that people call him. This may be hedge funds, this may be pension funds, this may be institutionals saying, you know, I've seen you on CNBC, or I've known you when you were at Goldman, or blah, blah, blah. You know, suddenly they know him again. What's your thesis on Tesla? Where do you think this is going to be? Why do you still have a price target of 400? When do you think the 400 will come? What's your expectation on 3 years, 5 years? So he confirmed this morning that he has these calls all day long again, which wasn't the case for a long time. And I think that's a very good indicator. I think that means people are slowly, you know, approaching the stock, checking out with their reliable sources, and I think for that case, Gary gets into that list, and that's how they make up their decision. Will they invest one single day? No. Will it be Warren Buffett? I don't think so yet. But others that are less risk averse than him, I think yes, they're coming in now.
And how many institutions do you think are out there that won't invest until Moody's gives them the upgrade too?
Oh, the very conservative ones, they will wait. And there's even a bigger hurdle. So both S&P and Moody's will be at the BBB level. And there are who can only do once the letters are A. So that's a full step up. So there will still be a small niche of funds that will not invest until we're up there. I still consider Tesla being a AA company in all metrics that should fall in there. So we'll just keep on screaming, right?
Yeah, yeah. And now, as Jay Lizard asks, who does Moody's have to answer to? Well, pretty soon it's going to be Alexandra. I mean,
you know that I worked for them.
Yes.
So at one point I had to answer to them. They have to answer a little bit to the SEC, and they have to answer, of course, to their shareholders, which one of the biggest one is Warren Buffett.
Well, that explains a lot.
It does, right? They have extremely good profit margins. I mean, the product is 3 letters. I mean, how much easier can it get, right? And people usually pay to get a certain letter combination. I mean, this is absolutely crazy as a business model and completely out of it. Just doesn't work anymore. I'm actually I think
they're gaming the system. That's all it is.
They are, but I think my hope is ChatGPT will put them finally out of work, because I mean, I've been seeing it for a long time. I worked for Moody's from end of 1997 to 2003. Yeah, end of 2003. And then I set up my own rating agencies, which I sold my share. I had 50% of that in 2007. And then I was out of the financial markets, and 15 years later, I'm sitting here. But when I went out in 2007, I was really convinced that rating agencies would not survive. Then came the financial crisis, where they had a crucial role. I mean, without them, they were the enabler of this whole thing. Without those damn AAA ratings for nothing, just, hot air, pretending to be sophisticated math, or I don't even know, statistical analysis. Without them, and still they're here. They're still here today. So I just hope that in the end it's ChatGPT that will get them out of it, because you can ask these questions to ChatGPT and they do probably a better job than any analyst will do.
Oh, yeah. So now, oh man, I totally lost my train of thought, but wow.
Oh, sorry.
No, that came and went real fast. Let me just see here. Oh, that was, so do you think over the course of this year, do you think, now with the prices coming down for all the Teslas, and the pressure it's going to put on legacy auto, do you think we're going to see downgrades on legacy?
That's a very good question. Now, I think the rating from GM, because Ford is already in the speculative grade area, right? So Ford was hoping for an upgrade. I think that upgrade becomes less likely. But Ford is less of an issue because they had to live, and that's one of the reasons why Ford is having lower margins than GM. GM still has an investment grade. Do they deserve that investment grade? No, but they are too big to fail. Ford as well, but GM is playing the Democrat donor card much better than anybody else.
Right.
So we had this question earlier in Herbert's space. I cannot imagine a scenario, not one, where a Democrat president, and even no matter what color the Congress, they wouldn't bail out GM. So the question is that rating already having a component of state guarantee? I mean, I'm pushing it a little bit when I say state guarantee, but you know what I mean, in it. And that's how they can hold on to investment grade, because that investment grade is crucial to them. If GM loses the investment grade, why is that such a catastrophe for them? Because 83% of investors in GM stock are institutionals. And so when suddenly they would have to be forced out by the stupid rules that currently don't let Tesla in, but would need to get GM out, GM stock would implode. It's not even explode. It would just go all the way down, because that's how they're, I don't see retail investors getting excited purchasing GM. I mean, everything is possible at a price, right? But the whole thing is, my question to myself is, why are 83% of institutionals holding GM? Why are the rating agencies keeping that investment grade rating that shouldn't be there? And the only answer I find is because they all know the US taxpayer is going to bail them out. This is actually your rating, Tim.
Yeah. And like, I look at, the IRA, and that was what a lot of people thought is this EV tax credit, the pre-bailout for legacy auto.
Yeah, but don't you think this morning, when I was waking up this morning, I thought, do I think that Mary Barra is already back in DC crying now? Because obviously the price cuts from Tesla ruined her fund now. Now, I still want to say they have the Bolt at 27,000. With the tax credit, the Bolt is 19,500. Would I change any of my Teslas for a Bolt? No, I would not. But I'm not a buyer at 19,500. There are people who need a 5-seater that's electric. They don't understand that Electrify America is crap compared to the Tesla supercharger. They heard that Tesla is opening the supercharger sooner or later. Who knows whether that will happen or not. But if you have that kind of budget, and if you want an EV, you're probably more likely to buy a Bolt than no car, right? I mean, obviously, if you can stretch it and purchase the Tesla Model 3, you will love that. But there will be people who can't, right? I mean, this is and at that price range, it's still a decent EV. I'm not promoting GM, but they have a car. And now suddenly Tesla is spoiling their fun. And they did, as you probably remember, they lowered the Bolt price in December in anticipation of the IRA. They were much more proactive about it than anybody else. And then they had the fire again for the 140,000 and the whole rest, and the Hummer and the Leary. And I know everything else doesn't work, but you have to give it to them that they have in the low price segment a car that has an attractive price.
Right.
So that may save them. But the thing is, it's a car at no margin, right?
Right.
At that price, they have a car in the road rather than giving it to somebody else. But it's not going to be a sustainable business model, that's for sure.
Yeah, and that's one of the things I was looking at with all of the production that's going on this year for Tesla. Obviously their focus is on volume. And I was talking to somebody the other day about, Ford and the Mach-E, and, they're doing relatively well with it on their aspect. But it's not like anybody else is stealing any sales from Tesla. It's, because I was talking to somebody and they said, a Bolt, they went down to get a Bolt, and it's like they had one and they said, oh, the next one's not going to come in for a few weeks. So they're like getting 1 or 2 getting trickled in over weeks of time, whereas Teslas are like just pouring out there. So like GM can't even fill their own demand. Ford can't fill their own demand. So whoever can fill that demand is going to win. So when there's concern about, Tesla having no lead times, there's cars in inventory, that's a very good thing right now, because there's a high demand for it. And now that they've
and let me add one thing. Think of fleets. There are so many fleets who want to change to EV now. They did at one moment get into the Bolt when the Bolt was still more expensive. But now at these prices, they're not going to find fleets. And Tesla, I don't think at the end of Q1 will have any cars to sell to fleets, right? So you will. There's still constant, because one thing we may want to address is why did Tesla put on their website that this is the offer until March? What do you think about that, Tim?
So I thought that they did that just because, like I said, I think they're going to, in Q2, maybe middle of March or April, they're going to drop the prices again. I think this is one of those, let's see what the prices look like. Let's see how this all plays out. So we're going to hold these prices till then. And if demand is moving one way or the other, then they can adjust accordingly. Yeah, I have a feeling that's really all it is.
Yeah, I agree with you that it's scouting out and scouting out in the different markets, and also obviously waiting what finally comes out of the IRS. Will the LFP batteries be included, not included?
Yeah. And I had a feeling that's why Tesla dropped the prices incrementally as they did in December, because they kind of knew this was coming and they wanted to test the waters and see how it was going to affect demand. And so they saw 3750 move the needle a little bit, but not much, but 7500 moved the needle a lot. So they knew at that point what it was going to do. And now they have a week, basically a week or two of each price movement to gauge, margins on that, like what vehicles are moving at what margin. So now we can gauge that moving into the next quarter.
How I would wish to witness that. Can you imagine understanding the price elasticity here?
Oh yeah.
Seeing, where does it work? Which model works? Which color combination works? I mean, that must be fascinating.
And I mean, because Elon is so data driven, he's got this all set up. So he can see everything. They've got all these numbers and like, all right. And this is probably why they chose 52,990 for the Model Y, because they're like, all right, well, we know that these colors sell more than these, and these color combinations with these wheels sell more. So we're going to be able to capture all of these. The few that we don't get, not a big deal. If the people want them, they'll either pay more or we'll just move the other ones. And it's going to be more efficient on the lines anyway, because that's going to be less options that they're going to have to deal with when they're trying to produce vehicles.
So you think in about 2-3 weeks, we'll see wait times again and no more inventory?
No, I don't. I think we're going to be, actually, I think we will. Like I said, I'm going to check inventory now. Seeing as we saw inventory drop as quickly as we did at 7,500, think about what we're going to see with 13,000.
Yeah.
I mean, I can almost guarantee we're going to see
13,000 and 7,500.
True. Yes. And now the 7,500, of course, is not a rebate right now. It's a tax credit, but 2024, it's going to be a rebate. So I'm really curious as to how that's going to play out. End of next year, we might see something kind of similar coming around. But yeah, I think we're going to see lead times pick up. We might even see them. I mean, because right now, ordering a Model Y long range is January to March. So we might see by the time we get to earnings, might be back to, 2 to 4 week lead times. We know Tesla's goal is to have 42 days, basically 6 weeks of lead time is nice to have for them. This year, I don't know if we're going to do that. I think it's going to come down to production. If they're producing enough and they're confident in the production ramp, with Tom possibly coming on board to do that. Imagine if all of their factories operate like Shanghai. Could you just imagine? I mean, so and now
did you hear that? Did you hear that when we had Trey on the space? Not today, not yesterday. I'm losing any notion of time. I think it was Tuesday with Gary and Trey, and Gary was trying to get of the poor Trey more out of it, but first of all, it's blackout period. No Tesla employee can do or say anything, right? But he jumps on those calls, and then we try to tickle it a little bit, and then I try to calm him to not say too much, but we nevertheless. So, but what seems to be clear is he said one phrase that, you know me now, it goes and goes until I find, right? Where he said, I'm so pleased we got our new boss and he's great. And I said, Tom Chu. And he said, no, Chris. And I was like, who is Chris? Ooh. So the question of the week is, who is Chris? And Chris obviously, so Austin, Chris, and Chris obviously made miracles for that production line.
Wow, interesting. So
I know, but I tell you, it's still there. It's still turning and turning.
So now, how do you feel about Tom? Do you think Tom is going to come on and take on that role of like global?
Oh yeah,
production?
I think that's a done deal.
Okay,
yeah, I think that's a done deal.
That was happen.
I think that's a done deal, and he will supervise Shanghai. From far, Berlin, Austin, Ram, Fremont, getting it to the latest state of production, but also new gigafactories. And my bet, and I may be completely wrong, and we should let them negotiate how they always have to. Remember when it was between Oklahoma and Austin, and we were all going this and this and this and that, and in the end it came down to subsidies and schools and free taxes for a couple of years and whatever, and that's how Austin won, right? And so I think we shouldn't really intervene here and speculate too much. But my feeling is it's going to be Mexico for a lot of reasons, for this whole IRA system, because there's so much to be taken from that for years to come. Cheaper production than in the United States, not that far from Austin, and easy to set up. So that's still, but again, this is pure speculation.
So and I like Mexico, Canada. I think they're going to end up doing two almost simultaneously, like they did with Berlin and Austin, and they're going to have one Asia Pacific because they need something other than China, and they're going to do something in either Mexico or Canada, obviously for the IRA. We know it's going to take 2 years before they really get this thing up and running anyway. Yeah. So by then, Shanghai is going to be kind of, I wouldn't say capped out, but they're really going to need something. So I would definitely see, I think that's been my pick all along. I think we're going to hear about
Indonesia more than South Korea?
Yeah, I mean, South Korea, obviously, we just heard they got hit with a fine because of cold weather stuff, whatever it was. I'm not sure. So South Korea, South Korea sounded good. So I think we're going to see them both. I just think we're going to see Indonesia first. And obviously, like you said, it's going to come down to a bunch of different things. What subsidies are they going to get? What benefits are they going to get? So I think that'll be a big role for Asia Pacific. And I think we'll hear Asia Pacific first before we hear North America. Now, my thoughts about Mexico, and I love it, but you don't think that's too close logistically to Austin?
No, I think that's actually an advantage that it's close enough.
Okay.
I think this is about labor cost and and production know-how. I mean, there are lots of car plants already in Mexico, and the whole building and setup is going to be cheaper than in Austin. And I mean, they're spreading out in Austin, right? It's not as if Austin is not growing. Austin is growing and will grow much more. There's so much space there. I don't remember. They can still do, I think, 8 times what they have. Yeah. So it's not a matter of that, but I think it's just, first of all, spreading risk. You don't want to have too much at the same space, but on the other side, you try to go there where you're most welcome, most subsidies, cheapest land, best production site, good labor, happy employees.
That makes sense. I thought about Canada for logistic purposes. They've got the materials up there as well. But Mexico makes sense. And I wonder, I mean, they're still saying that Shanghai is going to be their major export hub. But, shipping, further distance, like if they're going to get into South America, Mexico would make more sense.
Yeah.
And looking down the road, talking about these third world countries like in Indonesia that are really up and coming, and could potentially be prosperous in the next 50 years. Putting a factory there could really bode well for them down the road, because we know Elon looks far distances out. So I think
actually I'm going to say something that's not very popular. I was never for Berlin as a hub. I just think Europe has better places to put this. I mean, I grant you Berlin is an exciting city, and for young engineers, if you have to go to Europe, Paris, Berlin, Amsterdam are places where you blend in quickly into the town scene and everything. But I think Turkey, Poland, Romania were places where it probably would have made much more sense, much easier administrations, easier to find the workforce. I mean, I know they're scaling up now, but I think it was more painful than they expected. So one guess that I want is, I mean, again, this is me playing wish list, right? I don't even know whether that makes much sense, but having a second European location would be great. Something like Turkey or whatever, a little bit off center that has that also puts Berlin a little bit on the spot, that there is a competition, that it's not only them and that everything can be, decentralized if needed.
I almost wonder if Elon chose Berlin because he wanted to be right in the heart of where the competition was.
Sure.
VW, you're there. We're here, right here. Yeah. We're in your face. Let's see what you got.
Yeah, so. and I mean, East Germany is a great place, again, for subsidies still, but it has a very specific dynamic, right? It's different than BMW, who is in Munich, or Daimler, which is close to Stuttgart and Sindelfingen, or Volkswagen, which is more in the Ruhrpott. So you have these areas that are industrialized and have been for a long time and have their labor and have their rules and have their way of being. By putting it into Berlin, it was disruptive, and that's always a good thing. But I mean, we've suffered through administration. Remember the time it took to get that final permit, and water and trees and lizards and spiders and anything. We know all about it now. So I think it would be a nice notch that something would come in another country. Now, the one exception I want to put here is, because remember when President Macron, the French president, was at the White House in December, I think maybe end of November, beginning of December it was, he, on the second day, met with Elon. So Elon, who had nothing else to do between Twitter, Tesla, SpaceX, Neuralink, and the whole rest, had to jump to DC and meet with Macron. So they had the nice picture, both men sitting there and discussing. And then Macron put out a tweet saying, "Oh, it was wonderful." I don't like Macron a lot. You obviously sense that, but it was wonderful. Looking forward to have an EV production site in France. And I thought, oh my God, no, don't do it. Just don't do it. Call me. I tell you everything about it. And after half an hour, you will never do it. You can't do it. You just don't do it. Don't do it.
Oh, yeah. Yeah, I don't know. And not only that, but it's, I mean, sometimes you have to realize too how, I don't want to say small, but compared to the US, like Europe is relatively small. So logistically speaking, it's a hop, skip, and a jump from, France over to Berlin. So, it's not really that big. It's like putting a factory, a state over. It's almost like putting one on the other side of Texas. So
exactly. So no, don't do it. Or maybe Oklahoma, but no.
Oh, yeah.
Just no.
So now looking at this year, looking at, what we could see, whether we see a deep recession, a shallow recession, whatever is happening. Back on your Q3 earnings call, I believe it was Zach who said that, despite what we could see this year, we could still be doing a $5 to $10 billion buyback. Do you think that's still on the table for this year?
After buyback. So I'm still a big proponent of buybacks. I know. Everybody's going to scream again. Let me try to understand.
Well, we got to bring this drama back up.
Exactly. So here we are. So, and you will see another scenario where I don't have all my answers yet. When Elon sold, so he bought Twitter, we had the initial purchase price. We knew we had these 13 billion debt, and then he had 31 billion with a couple of co-investors to make those 44. But then a couple of weeks later, he sold in 2 tranches, another 7.5 billion. Okay, so these 7.5 billion, I still don't know what they are for. Maybe it was to keep the lights on in Twitter, and maybe I will never know. So I don't lose any sleep over it. But just let's put this out there. So he sold a total of about short to 40 billion shares. What does that mean? At that moment, the share was probably at $200 on average, but even whatever it is. So let's just take, so that would make 440 billion. So would make 200 million shares, right? I think so. I'm sorry. Yeah. I'm trying to do this in my head. Yeah, but that's it. So he sold 200 million shares in that year. What does that mean? It means that when you look at a stock, and I know this is the third time in this call I'm talking about quantity of stock, but it's really important. When you have stock, you look at how much is outstanding, the float, right? That's the name for it. When you have insiders holding stock, you usually don't think they will sell it. So they don't count really in the calculation of the stock price. Now, the stock price is obviously something, you can really compare that to a house being sold or not. You need a buyer and a seller, and then you find a price, right? That's how a price is determined. But the stock price is also a measure of how many stock are outstanding. And in that calculation, you have certain technicality to allocate it to what's really the float, meaning what's really available, what is not tucked away in some insider's pockets and shouldn't be touched. So when Elon sells this, 200 million stock is now supplementary around, and obviously drowns the stock price, right? Just because of offer and demand. There is more there than was before, and so it gets divided by more. So I think it's time to take stock off the market, especially when you have 21 billion not bringing you the same return on investment than your car factories bring you, or than your battery factories bring you. Now, again, I don't want any buyback unless they have money left over. So when people yell at me, and they do, but I'm getting good at being yelled at. When people yell at me saying, "Oh, but we need this money to build factories."
Oh yeah, yes, right here. No buybacks. Continue to invest in R&D.
Here we go. Yeah. Here we go. Don't buy. Don't exactly.
We agree with you. We agree with you. Yes.
There we go. So first, build those factories. Second, continue investing in R&D. Third, spend. Now, once you've spent it all and you still have billions on your bank account, please consider announcing a buyback program. Doesn't mean the next day you buy back. Doesn't mean that at all. You can say that this is over 2 years. And then whenever you want to nibble a little bit and pull some back, that's good. But the whole mood will move from, oh, there were 200 million more stock that we now have to absorb, to suddenly going, oh, they're pulling cards off the table. We have to check regularly how much is still around. And that changes the whole mood. So yes, I'm still for it, and I don't mind being yelled for it.
Yeah. And that's the same thing as when the employee stock purchase plan happens as well, right?
New, more out, more and more. But I mean, the employee stock purchase price is less an issue for me, because in my calculation, but not everybody, I put them in the ones that are tucked away, right? Because employees usually keep them there for a long time. Some of them have it as options, so they need to be vested and it takes time to do it, whatever. So they're just inherent. But you do remember that they changed that a couple of months ago, giving now the employee the first option to have it as cash compensation, meaning a higher salary, or they can choose stock, which obviously is still, in my view, the best option, but they don't have it in the other way around anymore. Now, suddenly, option A is more money, option B is having it as stock.
Yeah, and that's one of the things, and to put an analogy to it, it's like when you've got a drink and you've got your favorite drink and that ice melts and it becomes diluted, you don't like it. Yeah. That's exactly what's happening when Elon puts his shares and you get the employee stock purchase plan. Yeah. So you just need to clean that dilution out. So another question I had, I had somebody else on here, Adam, and he has a background in is all the different the money. God, I'm totally losing the thing. You were in it as well with all the different monetary
money maker, a market maker.
No, with all different currencies, all the different currencies.
Oh, he was in currency. Yes.
So we were discussing, and it came to my mind thinking about, we saw in Q3 with Tesla how, they took a big hit on the bottom line because they've got so much of their currency in the yuan. So thinking about the future, if China does end up becoming this massive superpower and their currency becomes significantly more valuable, how is that going to affect Tesla and the stock price?
At the moment, the fact that the yuan would become stronger is actually positive for the United States, meaning for US dollar accounting methods. So as long as Tesla stays a predominantly US dollar based company where the stock price is first and foremost in US dollars, the fact that the yuan would become stronger is a positive, right? It's when the US dollar becomes strong that the Tesla suffers, just because the big of the production is done in China. I don't really like talking about political risk in China just because I know nothing about it. I feel I'm speculating. I mean, I like already speculating too much, and I feel I'm going really on territory that I don't know. But I have people approaching me saying, well, what will happen to Tesla if China invades Taiwan? Well, I have no clue. I have no clue what will happen to Tesla, right? I honestly have no clue, and I'd rather tell you straight away that I have no clue. Or what will happen if the Chinese finally are so in love with BYD that they kick Tesla out because they own the land? I'm like, okay, sure. How about we have all the conspiracy theories in the world happening at the same day, right? While we're on it on a Friday 13th. No, none of that seems credible to me. Now, does it mean it doesn't happen? Yeah, crap happens from time to time. I'm old enough to know.
We saw 7 black swan events last year.
There you go. Exactly. And then but do I want to consider that? Is that a 5% scenario in my Tesla outlook? Not at the moment, but I may be off ignoring it. We'll never know.
Yeah. And I was just curious, thinking about how in the future, we're already seeing there's a very good chance that the Chinese EVs are going to be a dominant player on the global scale. That already seems to be like what we're looking at.
Europe.
Yes. Yeah. And then in Europe. And so we know that they're going to be moving over there first. Last I heard, NIO had some office coming up in California. So we know that they're going to be going global. We know that they're going to be moving in other areas. So seeing as them moving up, they're going through basically right now what we went through in 2008 and 2009. So if they come out of this stronger, it could bode very well. I'm still a fan of having Tesla have another factory in there, in another country on that side of the world anyway, just because, for safety reasons, it's good to diversify. But I was just curious because if the yuan becomes that strong, if it would really boost Tesla's stock price that much if we saw that happening in the future. But, I'm just...
Like I said, the problem is a little bit, if the yuan becomes so strong, it could be because China politically becomes so strong, and that could mean something for Tesla. Again, I don't want to go there, right?
Oh yeah,
so
yeah.
if it's just the currency appreciating, that's good. That's no problem.
Yeah.
But if it's the currency appreciating because of three other events, then I think we have to reassess whether, Shanghai is still so important. But I think they were right to not put initially another factory somewhere else in China, but to do Austin and Berlin first. And I still do believe they will actually do the next two not in China either. They may expand even more Shanghai if that's possible, but I don't think they'll go into a second location until they have a couple more up and running.
Yeah, I think so as well. I mean, we're already seeing the expansions coming on all their factories right now. Basically, Fremont's getting it to revamp constantly to get updated there. So yeah, we'll see great production. So when we get to Investor Day on March 1st, this Gen 3 platform, looking at the future, I think that's going to be a big thing. And I remember you said earlier that, we may see like one of those sell the news type situations because Wall Street's not going to understand it. It almost seems like Investor Days sounded like it's kind of like their future endeavors, what's going on. Maybe Master Plan Part 3 has kind of worked into that a little bit. So I'm curious as to, maybe this is actually going to be a day that Wall Street's going to get it. Maybe they're going to say some things like Gen 3 platform. What do you think that Gen 3 platform is going to be?
So the Gen 3 platform, I think, is going to be the platform on which all future cars are going to be built. It's going to be, maybe double, but maybe already monocasting. And it may even serve for the bottom of the Cybertruck. And the bottom of the Cybertruck may serve for a van. Again, I'm purely speculating. I get people challenging me. Again, I'm no engineer. I have no clue. I'm just the mama.
None of us know for sure. We're just guessing.
Exactly. And I'm the first one to admit when I don't know. There's stuff I know and I'm very good at, but when I'm speculating, I tell it all the time. But what I do believe is there is now going to be a bottom and side casting, whatever platform that is going to be the base for multiple models. Like the 3 and the Y were built, of the same mold, and then the Y got better than the 3. There's so much still to improve on the 3 now. So the Gen 3. But before I get to the March 1st, and I don't forget you, I want to pick up on something you said earlier with BYD coming to America and to Europe. That's true. I think they have actually cute cars. They have a sort of a fake Mini that I think is really cute. My European heart, right, breaks for that. But they also have now sedans that, it's no Tesla, sure, but it also costs much less. And there is a public for that. That's going to be a problem for the Bolt much more than for Tesla.
Yeah.
But anyway, Tesla, and Elon said that in that interview with the Tesla owners of Silicon Valley when they had them in the factory, if it's only about cars, they will catch up sooner or later with Tesla. But it's not about cars.
Yep.
It's about full self-driving. It's about robotaxis. It's about a completely other environment. It's about energy. It's about robots. So while the other people are trying to catch up with something where they are at best 5 years behind of Tesla, BYD maybe 3, but still not in margin, Tesla is running away. And the fact that they lowered now prices means they can do in volume what they can then implement all the other parts, and nobody else can do it. So and that's obviously still an if, but if full self-driving becomes a robotaxi, because for me, it's actually, I see it in 3 parts. Enhanced autopilot already works. Of course, still better, but that's that. FSD is still better, but it gets better by each version. Then there is the step that really there is no wheel and no pedals anymore, and the grandmother can just sit there and gets driven to her hairdresser, right? That is a big step, because for that one, you really need that we're very close to 100%, where the life-saving aspect is what. But if that happens, the competition can never catch up, just never. Yeah. There is no point. But simultaneously, you have now Tesla building up energy at a speed never watched at, and we'll see whether all those margins materializes and whether they can be credited immediately, or whether you have to wait 6 quarters until you can finally put them in, or whatever. We will see all that. But even if it is a waiting game, it is something that nobody else has of our competitors in the auto industry. And then comes the bot. So again, don't worry about the competition. It's normal. They will end up having other segments and other products, and some of them may even be cute and useful. But that's not the end game. The end game is a completely different end game.
Oh, yeah. And Tesla's only looking to have 20% of the market anyway. There's 80% left for everyone else. And that's perfectly fine per Tesla's plan.
And every ice off the road is an ice off the road.
Yeah. And my thoughts about this dropping the prices and getting as many vehicles out as possible is very similar. You know, we've got Legacy Auto right now, who they get the majority of their margins from parts and service. Well, EVs don't need parts and service. So where are they going to get these high margin items afterwards? It's going to come from software. Legacy doesn't do their own software. They outsource most of that. Tesla does it for themselves. So for Tesla, basically the same sort of business model is get out as many vehicles as we possibly can, which are, by the way, still higher margin than all of the ICE vehicles. And they're going to have even higher margin FSD and other software they can throw into these vehicles later. So even if they
remember how many times Elon told us, if anybody wants to license our software, we listen to you. Yep. And that was 2 years ago, but people don't understand what Elon said 2 years ago. People will understand in 3 years. That's the gap there is, right? He can say something, he can see the future, he can see where they're going. Nobody understands what he's really meaning. And by the time they catch up, lots of time has passed, but that statement is still valid.
Oh, yeah. And thinking about it, and this goes, going back to Will here, going back to the Gen 3 platform, it's like a big Hot Wheel. And so I was thinking about it when they started putting together the structural pack 4680. Now we're literally looking at, Elon already said their cars are like a smartphone on wheels. So now you're going to have your platform and you just plop the top on it. Yep. So you've got, here's the base for everything else. And you put just a different die casting on top. And now let's slap some software into it in the future. And by the way, you want to change your car for the future? All right, we'll just change the software. I mean, this is why when people are saying, when it's Legacy Auto and hey, this car, it's going to be a car. I'm like, it's not a car. That's the part you need to understand is cars that Tesla is making are not the cars that we know. Like you have a gas vehicle. It's not going to get better in 2 years because there was a software upgrade. It's just not how it works.
That's exactly it. Exactly. So I want to come back to the 1st of March because I interrupted you on that one. So yes, the Gen 3, I think that's it. It's the bottom that will then have different covers and different configurations of seats and whatever, but it will have the same software. It will have the same body. It will be very efficient priced. And I hope it will be very cute or very sporty. I mean, I love the look of the Teslas today, but I feel we need something new. And I mean, the Cybertruck is very different and very new, and I love it. But something that corresponds to a mass market cute product. Could be a van for families, could be a smaller hatchback or whatever. So March the 1st, I'm of all events in the next 6 months is the one I'm most looking forward to. And to the point that I actually want to travel to Austin this weekend. I'm going to look at flights and hotels and everything. I'm even if I'm not sure I can get in, obviously I'll do everything possible to get in, but if I can't get in, I think I want to be there, just meet with people, make sure that, we all get to know each other for once, not only over screens, and just, feel it out. And if I can have that factory tour, that's going to be the moment of my life.
Oh yeah. I for me, I was trying to look at where I wanted to go. And I know we're doing a big one in Vegas. So I'm probably going to end up going out to the Vegas get together for the F1 race. But yeah, I want to get to Austin. Like if they told me that my Cybertruck was ready and I could pick it up in Austin, I would fly my ass down there and drive all the way home. Don't care.
Exactly.
That would be awesome. Exactly. So I'm very much looking forward to that. And then, looking at, the lower priced vehicle, obviously right now, everybody's screaming, Tesla needs a $30,000 vehicle. Guess what? You got it now.
We got one.
Yeah, we have one. So it's now here. So I'm wondering if that Gen 3 platform, they're going to be announcing that sub $30,000 vehicle. Because that obviously is going to hit that mass market. But there, Gosh, I love to put the puzzle pieces together. So looking at the lithium refining coming up and Elon saying 2024, it's going to be producing. They're going to have the 4680s up and running. They're going to have other manufacturers like Panasonic, LG, and everybody else with the 4680s also. I'm thinking, 2024, 2025 is going to be that time we see that really lower price vehicle to hit the mass market. What do you think about timing on that?
I mean, it can't come early enough, just because I think there's a big need for it, not only from Tesla, just from the general consumer. I think the consumer today becomes more and more reluctant to change their current car to a nice car again. I think they want EVs. And I'm not talking only about the United States. In Europe, they're already much further. In China, they're much further. And I think it just will filter through everywhere. So, obviously, it takes time to ramp a car, but I do believe they're much further in that development. I wanted to ask you a question, Tim, because sometimes my memory slips. When they presented that car under, cover, and they talked about it, did they name 25,000, or did they name it the Model 2, or did they name anything? Or what? Because I have the feeling that so many people talk about it, I don't even remember what it was originally.
No, I think it was just future model or TBD. I don't think there was actually a name put on it, because if there was a name put on it, everybody would be screaming that name now, and nobody has been doing that.
So how did those 25,000 come up? Because that was the initial price, right? And then everybody went, well, with inflation, it can't be 25 anymore.
So I think it came out because they just said compact car. So everybody was just assuming the natural progression of things based upon master plan. I think it was part one was, come out with a high-end vehicle with high margin to be able to make enough money to come out with a next step down, to then come up with the next step down. So the next iteration based upon the Model 3 and Model Y would be that compact car, sub 30,000. And of course, before COVID and inflation, 25,000 made the most sense. I think that's where it spawned from. It was just the progression from master plan.
But nobody from Tesla mentioning initially the 25,000 amount?
No, not that I know of. I'm pretty sure that was a Tesla community rumor that flew around.
Yeah. Okay.
Oh, yeah.
Good.
Let me see. Is there anything else in the comments here? Robotaxis, yeah, that's all speculation. I think at this point here, so many people are like, all right, enough of the speculation. The stock price is way down. Give me the real deal. Like it's great and fun to think about. The last thing we'll chat about is energy, because energy we know is going to be huge this year. So this is also something that, everybody's like, competition is coming. And like you said, that's not what Tesla's here for, is the automotive market. They're here for so many other things that are going to push them out well outside of the automotive market. So with energy coming this year, how much of a surprise do you think it's going to be this year? And do you think it's actually going to be something that makes a big difference on the bottom line?
Okay. So the model obviously is the model that Elon has described a lot of times. Solar as the main source, wind, battery storing that energy, and giving it back to the grid whenever necessary. So you need these mega packs. But you now have a couple of, more utility cases. You have the ones in Australia where they needed energy because of the wildfires and everything else. You have the one in California, you have the same phenomenon. You have an unstable grid, and you need it not because you're pulling it from solar, but because you just use it as a stabilization method for the current grid. And you have at the same time this IRA, and I think the energy people were actually much more clever than the auto people of understanding how to use it, where a buyer of a mega pack gets a 30% tax credit of the purchase price. So at the same time, I don't think it was really bigly announced. Tesla opened this Lathrop, California plant. I suddenly saw a video, I think in October, of all these machines going bloop, bloop, bloop. And I was going, why is this? What's this now? Is this Nevada? No, this is Lathrop. I said, where's Lathrop? Right? It's just, I don't know where this whole thing came from, how long it was in building. And when I saw the drone images, I was like, this looks just like any industrial zone, right? Nothing doesn't look like, Tesla designed and logo and solar on the roof. This looks like quick, let's put it in and let's get it done. And so anyway, so we got now this Lathrop plant. We have then people who were going into the rabbit hole much more than I would ever on energy, because I have to admit, I'm usually very good with numbers. But when I get these gigawatt hours and terawatt hours and what, I'm like, whoa, where were I going? It really gets to me. It's crazy. But anyway, so the one number that Tesla confirmed is that Lathrop, once it's up and running and the way it should be, is 40 gigawatt hours. Oh my gosh.
Yes.
Per year, right? So that's 10 per quarter, which is enormous. I mean, I know it sounds 10 watt, but this is enormous. This would mean that there are as many cells in those megapacks than there are in the cars. So the possibilities there are enormous. And then you see Tesla's website where you can order these, and there are two different versions. One is a 2-hour version, one is a 4-hour version. Don't think the 4-hour version is better. It's actually a 2-hour version that's better. So the highest combination is available, I think, for $1.9 million, and installation is another 250 or 300,000 on it. But the interesting thing about it, not only those prices are enormous, and those prices are much higher than they were a year or two ago because there's so much demand for them, because there's the IRA, but there's also a grid that needs stabilization. But the second point is that the demand is so strong that the next one, if you order one now, will be delivered late summer 2024. So they're sold out. They're sold out. So up to there, I can grasp about what's happening. But what's now becoming more complicated is accounting for energy production, because there are a couple of different rules in place. And one seems to be that you can really account for the sale of these megapacks only once they are actively put on the grid. And putting them actively on the grid is something that can sometimes take months and months and months, because it depends on all the grid operators, and that they have to make sure it's stable enough to suddenly have this megapack plugged in. And so the current discussion among these people that I can just watch as a complete idiot is, but especially Matt is very good at explaining all that. He did that with Farzad this week. Is a great video, a must view from this week, is that the big question is, how quickly can Tesla recognize this enormous margin they're making? I mean, everybody seems to agree that currently, with current prices, the margin seems to be 50%, because it's not that complicated, right? It's the batteries in, the labor in, and what the inverters and whatnot. I mean, not that I would understand any of that, but there we are. But it seems to be that at the current prices that are sold. Now, the question is, are all those that have been now lined up until late summer 2024, have they all been sold at current prices? No idea. They may have been sold earlier at lower prices, right? So these 50% is the best case scenario if that was the price all through this production side. Then the last question obviously still is, even if that's 50%, can we recognize these 50% immediately at the moment when the megapack leaves the parking lot in Lathrop? And that seems a big unknown, because yes, Tesla in their 10K says they do it at different production stages, and they attribute it proportionally over certain moments in time. So at least most of it would have been recognized at the moment the megapack leaves the factory. But there are people from the industry that approach me, that approach Gary, that approach Matt, that approach Farzad, that tell us that's not how it works. It has to be able to be plugged into the grid. That can take months. So be careful. It could not be that it's straight away in Q1 or in Q2. It's coming, and it's coming big way. No doubt about it. It's coming. But timing of when this will be recognized and part of the balance sheet.
It's almost harder than the delivery wave. So it's just because it left the factory and is on site doesn't mean that they can recognize that revenue yet.
And you depend on a third party. If really that plug into the grid is a crucial moment in the accounting, and if I would have one question for the earnings call, that would be it. Yeah. Because all the rest, cars and all that, we're getting good at understanding what's happening. But this energy recognition, when can we really see this in the numbers? That's something I completely blind. Yeah. And then everybody that tells me seems to be, maybe you don't know.
Oh yeah. And then, I look back and, with the mega packs as pumped as they are going all the way out to 2024, obviously we're focusing on production as much as possible and getting volume out this year. The question, of course, comes up of, do they have enough batteries for all of this? But then going back to, I don't know if it was Martin or Drew who had said it back in September, saying for the first time that they can remember in company history, they have enough batteries to supply all of their stuff. So
it was Martin in an investor call with Goldman Sachs, and they leaked it deliberately so that it was in all the press and everybody had it. So and they never took that back. I think if Tesla had the slightest doubt and didn't want, and it was earlier than that earnings call end of October, and that one, I mean, I think in my life I've not listened to an earnings call so many times. I'm usually somebody who, that's the analyst in me. I need to listen a second time and a third time, and I take notes.
There's
and
always something you miss.
But exactly, and so this one, and the sound was so bad. Remember that sound?
God, can they please? If anything, that's the one question I would ask: is can you please get something better for quality sound?
Exactly. Buy a mic. We bought a mic to Gary. We can buy you a mic. There's no problem. We can do that. But to get back to the point. That earnings call, so many times I listened to it, was the most enthusiastic earnings call I've ever had from Elon and from Zach. Yeah. And so given that Martin 2 months earlier or 6 weeks earlier told Goldman Sachs we have all the batteries, given that in that call they didn't complain about batteries, I think battery is not the issues anymore.
Yeah. Yeah. And, one of the things I think about, just from a human perspective, mentality is, when you're going into a tough situation, but you're totally prepared to handle that, you're going to be ready for it and you're excited. And that kind of seems to me like that's what it was. They're talking about potentially getting into a deep recession, but they're excited at the same time. So that tells me that they're like, we saw this coming. We are ready for it. Bring it on. Yeah. And that's exactly what I took away from that call.
Yeah, I agree with you. And I actually think today's action, the price cut, just underlines that another time. I mean, the competition today was in a state, they were ready for a 3-day weekend and now they're suddenly back in the office. So very sorry. Not so that was offensive, no doubt about it. And in a good way, because it was not just, people were saying, oh, couldn't you have tried 2,000? No, Chuck, that's it. Now take it.
At this point now, if they do anything else, like I said, it's going to be a trim off the top, maybe $3,000 again once they see what happens in March. But otherwise, they're like, here's the hammer. Let's see what you got.
That's it. Exactly. I see a question from G. Lizard. Will Tim Chu be introduced to investors on March 1st? I hope so. I so want to fall in love with him. I mean, I know I won't get an Elon.
Do you think it'll take that long, or do you think they're going to do it at the earnings call?
Oh, I didn't even think about the earnings call, but I don't think his mission is earnings call. I think that's Zach. Earnings call is finance, and I mean, that brings back the big question: should Elon be at the earnings call? And I mean, obviously, I want Elon there, no doubt, and especially now, I want him there. I'm not saying I don't want him there.
He's gotten so much better at them now.
If he has a good mic, right? But that, but you remember, I don't know, when was it, 6 months ago, 9 months ago, he told us, that's it. I don't want to go there anymore other than for big occasions. He's been at all since, but never mind. It's always a big
I think occasion. He missed one. That was it. One.
Yeah. Well, yeah, maybe. Yeah. So anyway, so the will Tom Chu be there? I hope so. And I said that obviously as a joke, because I mean, I have my husband, I'm very happily married, but I really want to fall in love with him, because it's very difficult to create any emotion beside Elon, right? We're all fanboys and fangirls of Elon because he's just so extraordinary. It's very difficult to be a second person next to him. And he is clearly different, much more measured, much more, not this fireball of energy and
so many people said he's almost like the Tim Cook of Tesla.
Yeah, exactly. And I think we need that. I think that it will be great if he is introduced and if he makes a good first impression and if we all can, trust him and understand him. I don't think there's actually any doubt. He has done such a great job at Shanghai. and everybody talks about him so highly. And I watched interviews in Chinese, not that I didn't understand anything. Some of them had subtitles, but some of them didn't, just because I wanted to take in the physics and exactly.
Oh, yeah.
And I was like, he's so serious. He seems so much in love with his crew, with his factory, and the way this works, and he's so confident about it. It really gave me very good vibes.
I actually wonder if maybe when they had the COVID shutdowns, maybe he kind of played an Elon type role. Maybe he was sleeping in the factory with them when it was going on.
Yeah,
I would not doubt that.
That seems to be the case. Yeah, that seems to be. He seems to be very, very motivated by his job.
Oh yeah, I'm actually wondering if they do end up doing that. Maybe he'll come driving out on in a cyber truck, driving out on Investor Day to get introduced. That would be pretty awesome. All right, well, we are going to cut it off here. Thank you, Alexandra, so much for being here. What a great way to end this week. We got price cuts Friday the 13th, and Alexandra. My goodness,
there you go.
What a wonderful week. Is there anything else you would like to add tonight?
No, thank you very much. Thank you for having me, Tim. You're doing this community such a good service. I love watching your videos. It's really great. Thank you very much for being here, being our voice, and inviting me from time to time. I love coming on.
Absolutely. And if you guys do not follow her, she is a Tesla Boomer Mama over on Twitter. Highly recommend. Definitely follow all the time. Thank you guys so much. We will see you next time.
Bye-bye.